David, you're here, only 24 hours?
That's right.
Okay, wow, that's a very short trip. However, that doesn't signal the small opportunity in Asia? There's a big opportunity here in Asia, right? You're here quite often looking at...
I typically come here 6 to 8 times a year, but we have a large team here. We've been investing in Asia since 1997. And we've invested about $17 billion of equity since 1997 in about 210 transactions. So it's been a very important business for us, and it should be. Asia has 60% of the world's population, and now about 30-some% of the world's GDP, but rising to about 40% in about 10 years or so. So this is where most of the growth in the world is really going to be, and this is where firms like ours should be.
Right, and you said, as you mentioned, you've been here since '97, so it's been about 20 years or so.
That's right.
But has it picked up to you, in your view, in the last few years?
Well, when I came here in '97, the only places you could really do private equity and you could only do minority stake deals were typically Hong Kong, maybe Singapore, maybe Taiwan, some in Korea. There was no China, and there was very little in India. Now China has opened up. We've done 90 transactions in China, invested $7 billion. But you couldn't do that in '97. It really happened about 10 years ago.
Okay, so what is interesting to you right now? Like, what are the areas that you're seeing the most growth?
In Asia, we are most focused on China and India, though there are other countries, of course, we're focused on, and Japan is very important to us and has been for a long time. We've been there since 2000. But we're looking at companies in China that are heavily involved in the growing middle class, things that service the middle class, not so much the export economy. So things like healthcare, financial services, consumer retail, you're seeing a lot of growth there. The entrepreneurial sector in China is growing at a really high rate. Now, the SOE sector is growing at 2 or 3%, if that.
Right.
But the entrepreneurial sector is growing at 15 or 18% per annum. So that's where we really see a lot of opportunity.
Valuations?
Valuations are actually lower in Asia by about 20% for comparable assets to what you see in the United States. So the theory has always been Asia is very expensive. It might seem expensive in certain areas, but generally it's cheaper than the United States right now, which is obviously very expensive. So there's really a bargain here.
There is, and there's less competition, I imagine, as well, right?
Much less competition. And we take Asia as where private equity has a penetration rate of probably 1/6 or 1/7 of what it does in the United States. So there's much less competition. Now, there are a lot of good firms here, but compared to the United States, it's not very competitive.
Talk to me about the opportunity between, let's say, what's going on in China and India, which I know is a pretty substantive market for Carlyle.
China is a place which is very entrepreneurial, and it's very capitalist-oriented, despite what you might think because of the government's supposed, different roots.
Right.
But it's a very entrepreneurial place. In fact, 1 out of every 10 adults in China is an entrepreneur by the definition of the UN, which is higher than any other country in the world. Very entrepreneurial place, and there's a lot of welcoming of foreign capital. I think the Chinese government welcomes having private equity capital come in. Historically, India has been a little more complicated. We've made a lot of investments there, and we've made profits there, but we haven't made a lot of big investments until recently. Now we're making much more investments in India, and we think Indian government is much more receptive than it once was to foreign capital coming in.
Why do you think that is?
Well, I think they see what's happened in China. China has welcomed foreign capital, and it's been very good for the local businesses. It's also been good for the entrepreneurial class, and it's really created a local private equity class. In India, you don't have as large a private equity indigenous class as you do in China. I think that's going to grow. I think a lot of capital now is moving into India.
You mentioned that you're buying into the domestic demand story, right?
Correct.
The rising middle class in China, that story. In India, is it more about what?
Well, it's some of the same. I mean, the Indian middle class is about 250 million people. That's just fairly big.
Which is just incredible, yeah.
Right. So there's a gigantic middle class, and increasingly, as they get wealthier, they want the kind of things that middle classes want elsewhere: better health care, better food services, better financial services, a whole variety of things in the retail and consumer area. So we're seeing that already.
Do you find that, David, though, that there's an education process at all because private equity is not as well developed? It's not as a mature market for private equity as it is in the U.S. or in Europe. Do you find there's also kind of an education process as well here?
Well, there's no doubt that you have to explain to people what private equity is, but you have to remember, in the United States, some people don't know what private equity is either, so we have to explain it to people sometimes as well.
Right.
Sometimes when I talk to members of Congress and I try to explain what private equity does, they don't really understand it as well as I would hope they would, but they're getting better.
Right.
And that's true of some parts of our economy as well. Some people in the United States don't really know what private equity is all about. They think it's the image of the 1980s where we did different things than what we do now. And the same is true in India and China. People don't know everything we do, but as we explain it, that they realize that we are actually adding value, creating jobs, and really doing good things for the economy.
I was going to say, what's the story that you tell about Carlyle here?
Well, the story we tell is we're a global firm, one of the largest private equity firms. We have resources all over the world, and we can deploy those resources to help companies in China or India. We also can add value to the companies. We really do a lot of things to make these companies more valuable, and we help recruit really good managers and help train them. So it's a really good story, and I think it's one where our investors are very happy. We have a lot of investor interest now in Asia, much more than I've seen since I've been doing this at Carlyle.
Really?
Yes, much greater interest.
And that's because why?
Because right now, prices are a little bit lower here than they are in the United States and in Europe.
Okay.
You see enormous growth rates. For example, the United States is growing at maybe 1.5%. China is growing at maybe 6.5%. So that's a pretty good growth rate. India is maybe growing at 7% or more. So you look at the growth rates compared to what you see in the West, it's pretty attractive.
You know, we just had Carrie Lam here, the incoming chief executive, and she was talking about how she firmly believes Hong Kong is going to remain the premier financial hub in the next 20 years as it has been in the last 20. Do you believe it?
Well, if she didn't say that, I would be surprised. So, what would you expect her to say? But I don't know enough to know, other than to say every time somebody has predicted Hong Kong would not be as important as it turned out to be, they've been wrong. So you may remember in 1997, people said this is the end of Hong Kong, and Hong Kong was booming. If I first came to Hong Kong in 1970, and there weren't as many high rises then. If I had any money then, I would have been, made a lot of money if I'd invested in real estate. Even in 97, if you had bought real estate in 97, you would have done extremely well. So anybody that sells Hong Kong short, I think, is making a mistake based on the history of the last 50 years or so.
Hey, David, so I know you're going to be on a panel, in just a few moments. I imagine people are going to be asking you quite a few questions about what you think is going on in the United States, right? Where is the economy? Is the Fed on the wrong path to hiking rates? What do you say to that?
The U.S. economy is slowing a little bit. It's not going at quite the rate that people thought maybe 6 months ago. I think last year the economy grew under 2%. It was expected the economy would grow at 2.5% this year. Maybe people are softening that a little bit. I think the Fed is going to go ahead with its plan to increase interest rates. I think the economy is relatively good, but not as strong as people would like. I think there's some uncertainty about whether the tax legislation and the healthcare legislation is really going to go through.
Do you think it's going to go through?
It will. I think something will happen, but I don't think it will happen this year. I hope something will happen this year, but I think it's probably going to drag into next year before it actually happens. And I think that slowed the market down. I think the market thought initially the president would be able to get this thing through, these bills through, but it's taking more time than I think anybody really thought it would take.
But have we hit peak Trump trade? I mean, has that moment passed?
I can't say for sure, but I would say that there are many people who say that it's going to take longer to get some of the things that he wanted to get done to get done. So I think he recognizes that as well.
Do you think the Fed is making a mistake at all by continuing to hike? Are they hiking into a slowdown?
Well, the Fed, remember, is increasing interest rates by relatively modest amounts. When I worked in the White House, we had interest rates above 15%. So I'm not bragging about that. I'm just saying it was very high. So today, interest rates are relatively low. And even if you go up by 25 basis points or 20 or 50 basis points during a year, or even 75 basis points, you still have a very low base. So I don't think it's a big problem. If we have economic problems in the United States, it's not because of interest rates. It's probably because we have fewer people in the workforce. We have an aging population. We have very large entitlement programs are taking a large part of the federal budget. We don't have infrastructure spending as much as we need. Those are the kind of things that I think are really slowing the U.S. growth rate.
Is there any particular issue that you're waiting for that is going to make a difference for you and your business in the U.S.?
Well, knowing what the tax rates are going to be important because we all are affected by that. I think the infrastructure spending program is very important as well. We need enormous amounts of new infrastructure in the United States. We haven't built an airport in 22 years in the United States. The roads have potholes almost everywhere you go on the East Coast, for example. So we need infrastructure. And when that bill goes through Congress or whatever the program is, that will be very helpful to us spending a lot of money in infrastructure, I believe, with the private sector taking a big role. David,
you talk to a lot of CEOs in your role, in your job. How do they feel about the economy? How do you feel about it? I mean, is confidence still high?
Confidence is high, but I don't think people are saying, well, this is going to be the greatest time we've ever seen, because they don't know what the legislation is going to be. What people want in the business world is always certainty. Tell us what the rules are, and we'll adapt to the rules. Well, we don't know what the tax rules are going to be. We don't know what the healthcare rules are going to be. We don't know what all the deregulatory policies are going to be. We don't know what infrastructure is going to be. The president's working on these, but it's taking a longer time to get this done than he would like. So I think when we know what these policies are, I think you'll see more confidence.
But does it stop you from doing business?
No, you just have to adjust the prices you're going to pay, and when you're selling things, you adjust the prices you might get when you're selling. So we don't stop. We don't just say, let's wait till everything is done, but you have to adjust the way you react to where the policies are now.
And how do you adjust to the way President Trump is leading the country and the economy? How do you adjust to this?
Well, clearly, he is learning the job much more than he maybe thought he would need to. I worked in the White House with President Carter, and President Carter, like all new presidents, takes a while before you get adapted. President Trump, when you think about it, he's been in office for a relatively short period of time compared to the length of time that he has in his first term. So I think it's going to take a while, and he's learning the ropes, and I think he would admit that to anybody.
You mentioned before, we've talked with you about how, it would be nice for the public to participate more in the private equity world, right?
Yes.
And that hasn't happened. Why do you think that is?
It hasn't happened as much as I would like, because I think there have been regulatory issues, but I think they are moving in a direction of getting the public, which is to say non-accredited investors, to participate in private equity. Right now, the wealthy people have the right to get into private equity.
Right.
The non-wealthy people don't have the right to get these higher rates of return. I think that will be adjusted, and I think some of the things the SEC will do will take a lead in that effort.